Hello, gentlemen. Greg McCloskey from ForexLive.com. As we head toward the end of the current week and look toward next week, it's time to take a look at some of the major currency pairs from a technical perspective. We'll start with the euro versus US dollar. Before we get there, however, next week is going to be a key week for earnings in the US. We have the likes of Tesla on Tuesday, Visa on Tuesday, Boeing on Wednesday, Meta on Wednesday, IBM on Wednesday, Chipotle and ServiceNow all on Wednesday. American Airlines on Thursday with Caterpillar, Southwest Airlines, Bristol Myers Squibb, and then Microsoft and Alphabet, and Intel after the close. Finally, on Friday, we have Exxon and Chevron, two major oil companies reporting their earnings. So big, huge week in a lot of different industries from the stock market. As far as the economic calendar next week, it's going to be highlighted by the core PCE data, which will be released at Friday at 8:30. The expectations are somewhere around 0.3%. 2.8% is what they're looking for the core measure year on year. Other than that, we have the flash manufacturing PMI data coming out of Europe and the US. Those will be released on Tuesday. On Wednesday morning in Australia, their CPI for the quarter will be released. That will be key for them. The advanced GDP report for the first quarter will finally be released in the U.S. on April 25th. The Atlanta Fed GDP now I think is up to 2.9% for their estimate for that. And then we have a Bank of Japan interest rate decision also on Thursday. So be aware of that. Actually, Thursday night in the U.S. Friday. It will be the decision from the Bank of Japan. So a big, heavy schedule next week. Stocks and certainly the core PCE data out of the U.S. a key release. So with that said, let's start by taking a look at the euro versus U.S. dollar from a technical perspective, and we'll go from there with the other major currency pairs versus the U.S. dollar. I'm going to start by taking a look at the euro versus U.S. dollar on the 4-hour chart. If we look at the price action this week, it was largely up and down. We did extend to new lows for 2024. Lowest level going back to, back here, which is the month of October, November of 2023. So new low being made, but the price action to the downside could not be sustained. We started to move back higher, and we moved back above this swing area right through here where we had a number of different swing lows and swing highs. This is a 4-hour chart. So this is a couple weeks of trading before the market moved to the upside, and we fell below that level in last week's trading, and then moved above it in this week's trading at our peak for the week. That peak for the week fell short of the low price from February, which was our low price for the year until last week when the price fell below that level. So the low price here, which was support, becomes resistance here. And that's what kept the lid on the pair. So there are two levels of resistance that we're going to focus on in the early part of next week. One is this area between 1.0655 and 75. The next is the 106.94 level. If we get above both those levels, then traders will look to back toward this 38.2% retracement of 1.0709, and then this swing area up here up to 1.07314. And also keep in mind the falling 100 bar moving average on this 4-hour chart is near the 50% retracement of, again, this move down from this high to this low right here. So that's both the 38.2 and 50% retracement levels. Those are topside targets on further euro momentum. Now, having said that, the sellers are more in control. We fell below the swing area. We're below, we're below the low price early from February, and we stayed below that this week. So the sellers are more in control going into the week. And on the downside, we're going to have traders looking toward probably the 106.22 level, but really the 106 level is going to be key for this pair. That was the low for the week, and a nice little round number as well. It didn't necessarily correspond with anything that goes back in time to the last time we were here, back in October, November of last year. But it's a nice round number, and certainly if the price were to go below that level, then things would open up for the downside with this level, this swing area down through here as the next key target. That area encompasses these different swing lows and highs, or actually a bunch of swing lows through here. Then we start to look toward the low prices from 2023, which took the price all the way down to 104.47. So that's my look at the euro versus US dollar. Let's next take a look at the dollar versus yen. Let's continue our take a look at the major currency pairs by looking at the dollar versus yen. And to do so, I'm going to take a look at the 1-hour chart. What we've seen in this currency pair is a steady rise to the upside. We had a move higher there. We had a trend move higher here. We had another trend move higher here, which encompassed some of this week's trading as well. Now, when you have these trend type moves, you kind of look for retracement levels, and the retracement levels you want to see hold in between the 38.2 to 50% retracement. So this move to the upside right here came down and held the support between the 38.2 and the 50% retracement. This was the last move to the upside, which happened on Tuesday. This is Wednesday, Thursday, Friday, and you can see that the corrective move in trading here today came down to test a 50% retracement of that move to the upside. The price actually moved a little bit below that level. This is off of the Israelis' attack of Iran, so markets were working pretty fast to the downside. But we did find support buyers ahead of the rising 200-hour moving average. That's the green line right here, and the price snapped back to the upside. And as you can see, we're trading more toward the upside after holding the 100-hour moving average here on the corrective move to the downside here. So that's more positive for the dollar versus yen as well. Now, having said that, there are some hurdles above, including the high prices for the week, which came in at 154.69, and the high price that we saw on Monday's trade as well at 154.78. Those levels are the next target on the top side. In addition to that, we have the 155 level, which some people think is the limit for the Bank of Japan. The Bank of Japan is going to continue to try to jawbone the currency, the yen, more to the upside of late, but without much success. So if the price were to go up toward the 155 level, we could see some, more anxiety by the market, which could manifest itself in sharp moves to the downside, similar to what we saw right here through here, where the price moved sharply to the downside on on Tuesday's trade. This was more off of the Iran and Israeli news coming out. So just be aware of that. But from just a normal technical perspective, we're going to need to see the price move below the 100-hour moving average, and then ultimately, if the price is to go lower, we're going to need to get below the 38.2 to 50% retracement of this last trend move to the upside, and that level, those levels come in between 153.68 and 153.94, starting out with the 94 at 68 level. Note the hour moving average is also moving up into that area. That will start the new trading week, so be aware of that. So that's my look at the dollar versus yen as we head into the new trading week. The next currency pair I'm going to take a look at is sterling versus US dollar. The next currency pair I'm going to take a look at is a sterling versus US dollar from a technical perspective as we head into the new trading week. So let's get started. I'm going to start by taking a look at the daily chart, and you can see on this in the price action this week, there was lots of ups and downs at the beginning of the week. It wasn't until really today that the price started to move further to the downside. In the process, we broke back below that 38.2% retracement. This is of this range right through here. So breaking back below that, it was more bearish, and we came to the high of this swing area right here between 123.08 and 123.68. I know it's 60 pips, but we're looking at the daily chart, and this is where there was a number of different swing lows and swing highs going back in time to 2023, where the market initially found a nice little floor right through here. You can see all the different times that the price came down to this level right here and found support buyers against that level before we moved to the upside away from that level through here. And then we came back down to and through that level in the month of September of 2023. And we traded above and below for a month or so before breaking back above, coming back down, retesting this level and moving away from it again to our high prices that we saw in 2023 and in 2024 toward the end of the year, the high prices through here. Since the February or March, the price has been stepping to the downside here in the sterling versus US dollar, and in the process, we return back to the high of this swing area. So the 123.68 down to 123.08 is going to be the next key target on the downside. If we break below that level, we'll look toward this swing area, going back in time again, back to 2023 with some ups and downs in between. So be aware, be prepared. But this area right here, 23.08, 123.68 is going to be key in trading next week. We could hold support against it and push higher, or we could move below the 68, go down, test the 08 level, and then work from there. Let's look at the 4-hour chart to see what that is telling us. And not only is the 68 level a key level right here, from the daily chart, from the swing levels. But if you go back in time and take a look at the price move from this low right here, going back to, I guess, early October right here of 2023 to the high price that we saw right here, the 61.8% retracement of that move comes in at 123.63. So 68.63, that's going to be our key level that we need to get below in next week's trading to increase the bearish bias. Alternatively, if we hold it, then the price can rebound back up maybe toward this swing area right through here, which was the level of interest in trading this week. And also the 50% retracement of this move to the upside. That was a key level today. You can see the high price in trading here today came up just a little bit above that, maybe 3 or 4 pips above that 50% retracement level, and found willing sellers. And that pushed the price to the low for the trading week, and the lowest level going back to, all the way back to the November of 2023. So those are going to be our key levels right here at 68, right here at the 124.64. If we break below the 68 to 63 level here, we're going to open up and we're going to take our look back down toward the 08 level. Again, that's off the daily chart. So this is going to be our key levels on the downside. This key swing level off the daily chart that we need to get below. If we get below that level, it opens the door for further downside momentum. But you can see the importance of the 61.8% retracement. You can see the importance of the tie of the swing area. And both those levels come close together at 123.63. So be aware of that. Also watch the 50% on the top side. So that's my look at the sterling versus US dollar and the key levels in play next week. We're sitting on it right now. We'll see which way it wants to go in early trading next week. The next currency pair I'm going to take a look at is the dollar versus Swiss franc. The next currency pair I'm going to take a look at is the dollar versus Swiss as we head into the new trading week. What technical levels are in play for this currency pair? Let's get started. I'll start by looking at the daily chart. And what we know about the dollar versus Swiss from prior analysis is that we want to get above the 38.2% retracement. That comes in at 0.90252. And we trade above and below it all through this period right here, and then again this period right here. We also had this swing area down here, down to 0.8986 to try to hold support. So uncertainty around here until finally the price broke to the upside in trading last week. This was a CPI data, and we went up to this other swing area up through here, which was defined by swing highs going back to time to here. Then we used that level as a support through here and here before breaking back below and using the level as resistance and moving to the downside through here. And again, it wasn't until last week that the price off the CPI data of the US came up to that level and started to find willing sellers against this swing area right through here once again. And today's trading, we saw a flush to the downside. This is off of the news about the Israel attack on Iran. That sent the dollar versus Swiss down back toward the 38.2 at 0.90252. As you can see, we went a little bit below that level like we did through here, but once again found support buyers, and we moved all the way back up toward the swing area through here. So off the daily chart, this swing area at 0.9112 to 0.9146 is still a level that we need to get above. I think the high price in trading here today from Monday's trade got up to 0.9150, so just about 3 or 4 pips above that high swing area before failing. So understand that 91.46.5 is still going to be a level that we need to get to and through in trading next week. Let's take a look at the hourly chart and see what that is telling us. And you can see how that, well, actually the price went up to the 51 level, but that 46 level is up through here. And we're going to need to get above all that level to increase the bullish bias. And where we are right now, however, is right near a cluster of moving averages and swing area as well. The 100 bar moving average on the 1 hour chart and the 200 bar moving average on the 1 hour chart are near converged near the 0.9110-ish type area. And if we get above that level, that should open the door for further upside momentum to the upside. That level also corresponds with some swing lows and swing lows through here where we had support here and here and here and here. Before trading above and below through here. We tried to hold support against the level and move higher, but then broke below it level off of that news last night, sending the price sharply to the downside toward that 25 level, just a little bit below that level before rebounding back to the upside. So looking at this hourly chart, we need to get above the 0.9110-ish type area. If we're able to get above that level, we're going to be looking toward the 46 to 51 level on the top side to get to and through. If we get above those levels, it opens the door to the upside. On the downside, if we hold resistance here and we start to move lower, you see this blue line right here. This blue line represents the 100 bar moving average on the 4-hour chart. And you can see after the price moved to the upside here, we did try to find support levels against those levels, also against this old trend line right through here. So getting below that level is going to increase the bearish bias. Also, a level in play, maybe in the short term, is this level right here at the 0.9095 level. That level corresponds with this high right here. And then we started to use that level of support, resistance, and then resistance before moving a little bit to the upside and trade here today. We are above that 95 level right now, with the price looking to test those two moving averages on the top side. So I think the key levels in play right here, up here, and if we break in either direction, either to the upside or to the downside, look for momentum in the direction of the break. That's my technical look at the dollar versus Swiss going into the new trading week. Next currency pair I'm going to take a look at is the dollar versus Canada. The next currency pair I'm going to take a look at is the dollar versus Canada as we head into the new trading week. So let's get started. I'm going to do most of the focus on the 4-hour chart. And if we take a look at this, the price action of this currency pair this week, we'd had an initial move to the downside in Monday's trade. And then on Tuesday into Wednesday, we started to move higher. And in that process, we moved up into this swing area through here. That swing area is defined by a number of different swing highs through here where the market found either support or resistance against this area right through here before moving to the downside. So enough levels in here to give it some credence, and indeed the price high moved up into that area and found willing sellers in trading this week. The second time we moved up toward that low, we did find the willing sellers, and we pushed to the downside, and then Wednesday and Thursday and into Friday. We reached the lowest level for the week, and in the process we broke below this swing area through here. This is defined by, again, other swing levels, ceiling type area through here where the price kept on finding resistance and then moved above the level through here, and then reestablished support and resistance all through here before finding willing sellers here and moving to the downside. So again, a number of different arrows through here that form that swing area, and that is where the market is closing out this week in between those areas between 137.35 and 137.65. And this area right through here is going to be our barometer, as I like to say, for next week's trading. If the price moves above it, it's going to be more bullish. If the price moves below, it's going to be more bearish. On the top side, we're going to have this high price right here that is going to be a target level, and then we'll start to look toward the high price for the week and the high of this swing area back here, and that's going to be the progression to the upside before we get up to our high price for 2023, which came in just short of 139 level. So that would be the progression to the upside on more bullishness in the US dollar, more bearishness in the Canadian dollar. Conversely, if we start to see some unwinding of the US dollar strength, some additional unwinding of the US dollar strength, I should say, we should see a move back down toward the 38.2% retracement of this trend move to the upside. The level comes in at 137.04. It's kind of near this trend line right through here, connecting recent highs. I know we moved above and below it on this day, but then based against it before moving to the upside. So getting through that level will then have traders targeting the 50% and the 100 bar moving average on the 4-hour chart down here between the 136.47 and 136.61 levels, also corresponding with this swing area right through here, which extends up to the 68 level. So on the downside, we'd see the 38.2, the trend line, and then start to look down toward these areas right through here if there's more bearishness for the dollar versus Canada. So that's my look at the technicals that are driving this currency pair. The next currency pair I'm going to take a look at is the Aussie versus US dollar. The Aussie versus US dollar had, like some of the other currency pairs, had an up and down trading week with the pair moving down to new session lows after the Israeli bombing of Iran. But the market had rebounded into the close, despite the fact that U.S. stocks got hammered today. So no risk off in the Aussie versus US dollar. Maybe some dip buyers, and I'll show you why in this video. All right, the price is lower from last week's close in trading here this currency pair, but the price did move to a new session low in the Friday session, helped by that bombing and risk-off sentiment that we saw in the Asian session that helped to push the price down to around the 63. around the 0.635-ish type area before rebounding back to the upside. That moved back to the upside, got back above the 0.64 level. That level roughly corresponded with some swing areas back through here, and it also was a nice natural level to get back to and through. In trading earlier this week, the price fell below those levels but quickly rebounded back to the upside. Now the move, the corrective high that we saw around midweek and into Thursday, that came into this swing area right through here, which is going to be a level that's going to be important in the new trading week. The level was defined by a number of different swing lows and highs through here before moving to the upside. Then we came back down toward that level and again moved to the upside. It wasn't until the end of last week that the price came down to the high of that level. And in trading this week, we initially moved higher and then broke down below that level, using that level as resistance both here and here. So in the new trading week, with our price currently trading at 0.6416, the 0.6442 to 0.6455 area will be the next target to get to and through on the top side. If it's able to get above that level, that would give the buyers more confidence. In addition, we'd be moving back above this trend line, which we broke earlier this week as well. That trend line was defined by connecting to 1, 2, 3, even 4 separate lows here before breaking to the downside. I know we moved above it through here, but we did find resistance sellers against the high of that swing area right there. So that those two levels came into play for the Aussie versus US dollar on the rebound, and that helps to keep the bias more to the downside in this currency pair, quite frankly. But if it were to break above this 0.6442 to 55 level, then things are going to looking a little bit better. We're back above this floor area through here, and then we'd have traders looking up toward this level near the 76 to 86 level, followed by the falling 100 bar moving average on the 4-hour chart, which comes in at 0.65115. That would be the progression to the upside. Now, if the sellers can remain remain in control and get below the 0.6400 level, it does and should open the door once again to the downside for this currency pair, where really there's not a lot of support other than this is these swing areas through here, maybe that down to this level right through here, or maybe this low right through here. But as you can see, the last time we were down at this area, it was just choppy up and down price action forming the bottom through here before moving to the upside right there. So be aware of that for this currency pair. We'll watch the 64 level and then watch the 0.63625 level, followed by this level low right through here. Probably around the it looks like around the 40 or 50 level for the Aussie versus US dollar. So that's my look at the currency pair as we head into the new trading week. The final currency pair I'm going to look at is the New Zealand versus US dollar. Like the Aussie versus US dollar, the New Zealand versus US dollar had up and down price action, but on Friday, with the market moved to a new week low, I should say, before rebounding to the close. Taking a look at the 4-hour chart, the price low that we saw today, or on Friday, I should say, came down to test a swing area that was defined by different swing lows and then swing highs through here, and then we moved back above that level, moved higher, and then rotated back to the downside, retested this area for the one last time before moving higher. It wasn't until this week that the price first initially came down to the high of that swing area, then in the middle of the swing area, and then at the low of the swing area down here at the 0.5851 level. The high of the swing area comes in at 0.58699. The market then rebounded back to the upside. As you can see, we're closed around the 0.5887 level on Friday. Now, on the top side, the corrective move off of this low right here came up to this swing area right through here. This swing area is defined by different swing levels going back in time once again. And if I go back to levels right through here, we had resistance against the level. Then we had resistance here, resistance here. We moved a little bit above it here before reestablishing and going lower. And then we broke above the level, used a level of support before moving to the upside, and then back down one last time where we tested the level and moved to the upside. It was kind of very similar to this price action right here. We're moving higher and lower. In this case, we moved higher and lower back into that level and back to the upside. It wasn't until a few weeks ago that the price came back to that level, and then at the end of last week, the price came down again to that level, found support buyers into the close, and then Monday's trade this week, we finally broke below that level, moving to the downside, but the mid-week high price came right up to that swing level. So on the top side, if we move higher We're going to have to get through the 0.5933 up to 0.59415 level. If we do that, then we'll look toward the 100 bar moving average on the 4-hour chart and then move back up toward the 61.8% retracement. That's the broken one of this move to the upside through here. So that's a progression to the upside for the New Zealand if the buyers remain more in control. Conversely, if we do move below this floor area, then we're going to start to look down toward our low prices that extend all the way down to the 0.5772 level. That was a slow price going back to October of 2023 before the price started its rotation back to the upside. So, I guess I would keep the sellers more in control below the swing area, but we do have to get below this low level before we can go and retest and retrace the entire move from the 2022 October low to the current levels right now in April. So that's my technical look at the New Zealand versus US dollar to conclude my look at all the major currency pairs versus the US dollar to start your new trading week. I hope you found these videos helpful and interesting so that you can be aware and prepared for the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.